why do VCs shy away from the SME market?
When you look at VC investment, you have to realize VC's money is time bound. Typical venture capital fund has a 10 years life. Now, assume somebody is in their second or third year of that journey, right? Now they have 7 years left before they can invest and get that money back from us. Now, because we are working in this SME market, the growth will not be front loaded. As in, if you look at a lot of consumer tech startups, you will see that first few years will be 3x 10x growth, and then they'll start growing at some 20-30% year on year. In SME market, if you look at, the curve is generally the opposite, right? In initial years it grows a little slower, and then when the product is more comprehensive and built out completely, that is where the real growth comes in. Okay, right? And a lot of which could mean 12 years to 15 years of growth, right? But consistent, whatever, 50-60% or even 200% at some time. Okay. So that is what keeps the VCs shying away from the SME market. Even if you look at some of the companies that have raised in our domain, right? They've raised from evergreen funds. So IndiaMart, for example, is an investor in Vyapar. Now IndiaMart is investing out of their balance sheet. They don't have like a deadline with their money, right? Similarly, Westbridge Capital, for example, 40-year fund, almost like an evergreen fund, right? So they don't have a deadline with their money. We will see those multifold jumps in our revenue maybe after 3 to 4 years, not initial days. Okay, which is a very anti-VC kind of stuff. A VC wants to come in now, see a 3x growth year on year, like at least for 2-3 years, so that they can see we're raising our next round at 10x, etc., which is not possible by design of the market. Okay, with the AI coming in, it feels like that these things will be possible, where the growth might be 10x in a particular year, but again that will require heavy investment on the AI front itself.